How do you remember the events of the financial crisis? For many of you, like my students, it's more of a history lesson. And we discuss things like low interest rates, subprime mortgages, the collapse of Lehman's, lax lending practices, and excessive risk-taking. In the US, they describe the financial crisis as the worst crisis since the Great Recession, the Great Depression in the 1930s. My students ask me, do I remember that as well? Another icon of the financial crisis is a little piece of mathematics used by banks to measure risk. This is value at risk, or VaR. And this is used by banks to measure how much risk they have in their portfolios and how much capital they should hold for that. It has been described in the financial press as the number that killed us. It has also been described as the most important number in finance, but not in a good way. And the regulatory system is proposing a new mechanism to measure risk, and they've given it a slick new name. This is the Fundamental Review of the Trading Book. Okay, I lied about the slick new name. And this mechanism is designed to address many of the issues that arose in the financial crisis. But can the events of the crisis really be blamed on a mathematical model? Banks say they will adopt the new measure for risk capital purposes only, but they will continue to use VaR in a way that, in their day-to-day risk management. Apologies to those of you who thought I was going to talk about video assistant refereeing, but in a way, VaR does act like a regulatory referee for bank risk-taking. Unfortunately, its critics maintain that it failed in this regard. So my research looks at how VaR is used in practice. Now, are the users of this VaR model dopes? Do they unquestioningly accept the output of this model? What I find is that they are very aware of the assumptions and limitations of the model. They are not model dopes. So is VaR a villain or a scapegoat? We find that there's an institutional stickiness to the VaR model, that it has become innate to how practitioners think about risk. But it does not automate decision-making or risk-taking. It does have a latent power, however, that is dangerous to underestimate. This research is important in the context of the current regulatory reform if we are to ensure a stable banking system. Thank you.